the presentation is we show you a few slides. I will give a short glimpse of the live system as it is in production right now. After that, we'll have a question and answer session. If you have questions in between, you may also chat them. But in the end, we will take our time to answer some of your questions. So I just hand over to Ellen to briefly give us a summary of what Reveal Insight is all about.
Hello and welcome. I'm Alan Scott, an advisor and early stage investor in Reveal. I'd like to start by asking you a question. Would you have welcomed the opportunity to be an early stage investor in Amazon or Airbnb? Because we believe we are the equivalent business idea for the 84 trillion per year institutional investment industry. Airbnb are the largest hotel but don't own a single room. Amazon, the largest global retailer, but don't own a single shop. Likewise, Reveal intends to be one of the largest asset managers, but have no assets under direct management. We're a platform. We connect institutional investors to asset managers quickly, easily, and efficiently. I'll now hand over to Savannah, who will introduce you to the rest of the team and your speakers today.
Hello, everybody. I would like to introduce you to our speakers today. I'll begin with Edward Vickery, founder, who built his own third-party marketing company in California under the regulatory umbrella of New York-based broker-dealer. Over 10 years, he has successfully raised millions for alternative fund managers. However, he has endured many inefficiencies, lost many deals, and worked with many problematic managers, which hurt both his investors and his business. These setbacks led him to conceive the idea, which brings us here today. Then we have founder Andreas Mueller, who has worked in technology for over 20 years at companies such as Accenture, UBS, and Capco. He has already built the Reveal Insight platform and will continue to develop it, as well as ensure that his financial planning for the business into which you are considering an investment into remains on track. We also have advisor and investor Alan Scott, whom you heard speak a moment ago. He owns a number of successful financial and tech businesses, and he is an experienced business leader and entrepreneur. So as you can see, the team has already grown significantly since the launch in late summer this year. So I'm one of the account managers in the sales team, first-handed the excitement in the market for our product. So now I'm going to be passing it on to business visionary Vickery.
Thank you, Savannah. Okay, let's start with slide 4, opportunity. What we have here, ladies and gentlemen, is the biggest opportunity that I have uncovered during my entire career. This is an $84 trillion industry which has failed to modernize and continues to operate using archaic practices. While many other industries have applied technology to assist the client in accessing and choosing non-branded vendors. Airbnb, Amazon, and TripAdvisor are good examples of this, redistributing market share away from the brands to the small vendors in the accommodation, high street shopping, and restaurant sectors. They have earned a fortune for themselves and their investors by achieving this. 90% of the assets in our industry are under the management of something like the top 20 or 30 brands: BlackRock, Bridgewater, Blackstone, PIMCO, Oaktree. These managers have over 150 billion, each of them. We estimate that there are around 50,000 asset managers across the private equity, real estate, long only, and hedge fund asset classes. Therefore, the other 49,980 managers desperately require a solution to disrupt this consolidated market. Small and mid-sized asset managers offer a number of advantages to investors. They tend to outperform, they tend to charge lower fees, and they have lower minimum investment thresholds. Yet despite this, they fail to attract assets, mainly because brands dominate as the safe haven. It is easy to identify the brands. There is little need to research and spend years getting comfortable with the brands. And investors know what type of professional service they will get from these large corporations. But what if you could get the performance of an emerging manager with the safety of BlackRock? Slide 5, why now? Due to the pandemic, asset managers cannot spend their marketing budget on road trips and conferences. They require an alternative which provides us with an opportunity to change their method of raising assets. Our industry, the alternative assets industry, has finally begun to digitalize. It has become standard practice to carry out Zoom video meetings, exactly like we're doing now, and work remotely. It should have happened 10 years ago. I would certainly have a lot less wrinkles. Yet the financial sector has always been conservative and lacked creativity. For those many financial services professionals who benefit from their Swiss banking family name or Goldman Sachs being on their CV, it has also not been in their interest to change this archaic system. However, behavior is changing, and now is the time to take advantage of it. Slide 6, idea and plan. At Reveal Insight, we have built a platform which allows investors to efficiently select asset managers, as well as provide them with accountability and verification to protect their interests. This introduces meritocracy to an industry which has traditionally relied on relationships and brands, and all the mess that goes along with that. We apply data and technology to save time for all market participants, making investing safer and enabling us to broker more deals faster. Slide 7, problems for asset managers. Performance alone is insufficient to attract investors. It's very, very difficult for those 48,000, 49,980 other managers to raise assets. If the performance is too good to be true, it often is too good to be true. And if it is generated from taking too much risk, then it's worthless anyway. If the performance is average or poor, it also does not sell easily. The understanding of the strategy and trust in the team and business is also required to raise assets. And those are very difficult qualities to convey to a prospective investor. It takes time, and it takes a lot of effort. AUM is a big part of that. It's a measure that investors use to gauge the professionalism and reliability of a manager. But managers can't raise assets without already having assets, so it's a catch-22. Slide 8, problems for institutional investors. If an investor chooses to allocate to a non-branded manager, because there are some advantages which I mentioned, the onus is on the investor to identify which of those 49,980 non-branded managers is the correct fit for them. That's a lot of work. The onus is on the investor to carry out the research on those asset managers and spend time getting comfortable with their personnel. That's a lot of work too. The onus is on the investor to verify the authenticity of the manager's documents and seriousness of their professional setup. Given the size of this market, investors tend to rely on introductions, therefore. Relying on referrals is a bad idea. Traders don't invest with their emotions, so why are investors allocating with their emotions? Shared commonalities shared alumni, shared religions, and chance meetings at conferences and at the conference bar create selection bias, which is also not a good way of making decisions. Furthermore, the interests of third-party marketers and investor relations personnel are misaligned with investors. This is critical. I know this from my background as a third-party marketer. Remember my previous business, pre-existing business for 11 years. I felt incentivized to sell managers with lengthy lockups, with high fees, and strategies that were perhaps taking too much risk because it would maximize my revenue, despite this being at the expense of the investor. Let's think of an analogy. If you're planning a holiday in the south of France and you ask some friends for referrals, are they referring you the bed and breakfast which is best for you? Or are they referring you the bed and breakfast which is run by their cousin? That's what we have in our industry. With Airbnb, you avoid that dilemma. With Airbnb, you also do not need to telephone a number of bed and breakfast options and ask each one of them the same questions about the distance from the airport, whether or not they have a bath or a shower. But that's how brokering institutional deals into alternative asset managers currently transpires. Reveal Insight fixes these same problems for investors trying to navigate the boutique asset manager universe. Slide 9, problems for intermediaries. Well, this is exactly where the wrinkles came from. Intermediaries are in a very weak position. They must do the work of the investor, sourcing the best asset managers, and the work of the managers selling to the investors. They're also in a weak position in regards to collecting payment, as without a tangible product which controls the deal process, they can easily be circumvented and have little means to track the deal progress or commissions owed to them. Our brains are also far inferior at matchmaking than the power of a computer algorithm. So who can broker a deal better, a human or a computer? I'm a human that's a broker, but I believe in the computer. Slide 10, solutions. How useful would it be for an asset manager to arrive at his desk on a Monday morning with 4 or 5 new video calls already scheduled in his calendar for the upcoming week with pre-qualified, suitable, and seriously interested investors who already feel comfortable enough to allocate? We are building a calendar syncing and video call facility on our platform so that investors can reverse solicit meetings with the most suitable managers that we help them to identify. How useful would it be for investors to condense a 3-year research and relationship building process into just a few clicks? We summarize the quantitative and qualitative information that it usually takes investors years to collect. And we do that on a single page. By applying levels of verification to the managers, we instill trust in the investor. By collecting ratings from current and ex-investors, we introduce accountability to protect the interests of our investors. By applying matchmaking algorithms, we speed up the process of identifying the most suitable asset managers. We take, therefore, the burden of identifying, researching, and building trust away from the institutional investor or the high net worth investor to make it easier for that investment community to allocate to non-branded managers, where they get the better performance, the lower fees, and the lower minimum investments. How useful would it be for intermediaries to be able to broker deals while sleeping and track deal progress and the commissions owed to them, while being able to identify and raise capital for only the most honest and professional asset managers? I can tell you that would have been really useful for me over the last 11 years. We have incentivized each user type and Reveal Insight to invite other user types on the platform to help this to go viral. We incentivize investors to provide ratings as it allows them free access to the full rankings and ratings on the platform. It keeps their identity anonymous while also hiding their contact details, unlike when providing a traditional investor reference for the managers into whom they're invested. Likewise, asset managers are similarly motivated to invite their service providers to verify them in order to attract more investor interest. Indeed, how useful would it be to everybody to spend less time lost in this labyrinth of lunacy and more time enjoying life? Slide 11. Nobody else is doing this. There are many platforms providing simple Internet 1.0 information on asset managers. There is nobody providing qualitative investor feedback and proactively brokering deals on a digital platform. Managers visit Preqin and Brighton House Associates to find basic contact information on investors. Investors visit Barclay Hedge, Morningstar, Bloomberg, and Eureka Hedge to find basic performance data on asset managers. And these businesses all make money, offering very little and simple information. We bring the two groups together to a single reputational marketplace. Slide 12. How do we earn money? Investment consultants such as Towers Watson and Wilshire Associates, Cambridge Associates, they charge institutional investors a lot for single data point subjective information obtained from interviewing the managers themselves. Our mission is to offer the investment community superior information for free. By attracting the investors with statistically significant, objective data from real investors, not investment consultants, but people who put their real money into those managers and had a real experience, we have the opportunity to earn handsomely from the managers receiving these capital inflows thanks to our platform. We've developed a freemium pricing model to attract users rapidly and to populate our platform quickly, while also generating early stage revenue prior to the larger commission flows arriving at a later date. When brokering deals, the performance pay, the fee share is often paid 1 year in arrears. Now I will hand you over to Andreas, who will explain the financial projections and show you a short demo of the product. Please listen attentively because his Teutonic Knight accent can be tricky to follow.
Hello again. As Edward said, I want to show you a little bit of what we have done so far and what we are planning for the future. So you see the slide growth, and it has a couple of phases on. It started in 2019. We went through a bootstrapping phase where we put in a lot of our time, built the MVP, looked at the initial service and pricing models, looked at customer value propositions, did a few tests with a number of asset managers, investors, and so forth. And now we are in the what I call scale-up preparation phase. In other words, we're getting ready for next year. And that implies that we onboard the first employees, that we are changing or optimizing the organization so that it still works when it's a little bit bigger. We looked at the marketing we need to do. We get the technology ready for large scale use, because next year, the third phase, scale up to profitability, is indeed a phase where so we can get a positive cash flow according to our plans that are, of course, based on Edward's experience, who has been in the business for 11 years. So based on that, we did 3 calculations: worst case, medium case, and best case. And you can see, for example, there on the bar chart, the upper bar chart, the number of asset managers we're aiming to get on the platform. And the estimation continues until 2025. And on the far right, you can see what numbers we are expecting by 2025. Again, worst case, medium case, best case. Best case is already approaching very closely our target group of asset managers. In other words, the ones that are best suited for this kind of platform. Not too big, certainly not the big brands, but the small, eager ones that have better performance than the big brands. It's all struggling a bit to get popular and all the things that we mentioned earlier. So if we move on to the next slide, similar estimations, but this time based on revenue. I'm showing next year, scale up to profitability, and that's indeed the year when we are moving from negative cash flow to positive cash flow that we are aiming to hit the beginning of 2022. And then you can see on the right, go towards the target market, how much revenue would we get in 2025. So end of 2025, worst case would be 20 million annual revenue. And if you translate this into making an investment, then actually what it turns out to be, if you make 100,000 investment, by that time you would get 2 million, worst case, 6 million, or 20 million. And the funding we require to do this, to go to positive cash flow and grow, is 500,000. Where we say there's a corporate minimum 50,000, private minimum 10,000. What are we going to do with this money? Largely, we're going to use it to accelerate ourselves. In other words, more people in the technology development, bigger sales team, sales and marketing team, things like this. And on the right, you can see I did the costs and revenue, and then a big white bar in the middle, that shows a gradual transition into the positive. Okay, so let me quickly make that a little bit bigger and show you a few impressions of the live system. There I've just taken up reveal insight.com as it is today. And when you use this link, you go to that page where you can see the various users that we have, and you could say, oh, what does it do for asset managers? Click on this, and clearly, first thing you can do is take a look at other asset managers. But of course, as an asset manager, you can enter your own corporate profile. I'll show you in a second how that looks like. So you can start right away here. Let's use this browser. Once you're logged in, once you have added your corporate profile, the view about things you can do changes a bit. Obviously, if you have entered your corporate profile, you can edit it a bit. But let's take a look at view other asset managers. You're given a screen where you can see all the asset managers we have on the platform with quite a bit of data already there. You can search for a name, that's simple enough, but you can certainly also go ahead and apply various filters to this result. And while this looks like it's quite a lot, what you can filter for here, it is actually optimized in such a way that investors can find their personal preferences as conveniently as possible. And investors will also be able to save their searches. And we will be able to use these saved searches to, for example, notify them when a new asset manager comes in that fulfills their criteria, things like this. So this starts quite easily. You can start by filtering for rating. You see the rating, you see the verification, important help for due diligence that we're doing, as Edward has mentioned. And you can see a couple of data points already. You can certainly always click and take a look at a detailed view, which would look something like this. So you see, well, what's the overall rating score that people have given? What's their overall verification level? It can go to 5, and it gets more and more sophisticated. It has a lot to do with, are these people really who they claim they are? Is the company really existing? Have audits been done? Are service providers coming back and confirming that? And it gets a bit more sophisticated so that it's easy to see for an investor, oh, I really need to be sure here. I need level 4. And what you see here in the detailed view, some key facts. You can see a breakdown of all the ratings that have been given, verified by us, and accepted by us as being a genuine rating. So the key questions, there are 10 questions, and you can give 1 to 10 points each for these. And it's punctuality, accessibility, reporting, and so forth. So you can get a pretty good view on what is actually happening with quality of the team that is managing this. So you can also see if some people give a comment after the rating, it shows up here. You can get some information about the team, short CV that people can add there. Some documents, company presentation is there, the performance data is there. And of course, some key information about the funds. Maybe looks a lot, but again, this is this is helping the investors to filter for this in a very efficient way. Okay, let me get back to the presentation, because with this, I hand over to Ellen to sort of quickly wrap this up before we go into a Q&A session.
Sorry, and I was muted. Sorry about that. Thank you, Andreas. Everyone, look, I trust your understanding of why, how, and what we do has increased significantly. We are a B2B marketplace in a specialised segment of institutional investment. We add value and efficiencies to the 84 trillion that flows between investors and the institutional funds. However, I'm sure you may have some questions or would just simply like to understand more about how this business scales and why it will generate significant revenue quite quickly, all of those sorts of things. So if you have any questions, please put them forward. I'll hand over to our founder and business visionary, Edward Vickery, who will field your questions. Thank you.
Yes, thank you, everybody. So thank you for listening attentively to our dialogue. It's your chance now to shut us up and ask some questions. And also, I did notice during Andreas's coverage of the financials that something you mentioned in the webinar that we did yesterday with Asian-based investors was what a typical investment would grow to. And I think you admitted that. So if anyone's curious to know our estimations on that, we're happy to share it. The lower, medium, and optimistic outcome. Are there any questions at all in the chat? You can post them in the chat if you have any issues with the your internet connection, you can't speak clearly, or you're just too shy. If not, we can also ask Savannah, is one of our account managers. She can give a brief explanation or description of how things have been so far, since we've been feeling about how interested the asset managers are that we're signing up at the moment to the platform, and how hungry they are for our service. Could you explain a little bit about your experience so far, Savannah, as an account manager?
Yeah, I can. So basically, most of the responses we're getting are very positive, and a lot of the asset managers are really showing interest in the platform. Like, it's relatively easy to schedule a call. It's relatively easy to get them to get on the platform and take over. And we're just filling up the platform right now. And this is mainly because, like, right now, this is a very relevant solution in the market. And a lot of managers, or their business is suffering right now because they can't do those one-on-one face-to-face meetings that they used to be able to do. So with COVID and with the economic situation right now, this is a really relevant solution for managers, and they are jumping on it. So that's good.
Thank you, Savannah. I do notice a few questions in the chat. Just want to say something, sorry? I did notice some questions in the chat. So Paul has asked if there are connections to Morningstar. No, in a way, Morningstar is our competitor, but they're doing things in a very simplistic way. They just offer data, performance, right? Now, most of the industry, and we've researched a lot of the competitors, they really do focus on performance. And we believe that there's a big gap there because nobody can invest purely on performance. And if you look at Amazon, Alibaba, TripAdvisor, Uber, Turo, eBay, Airbnb, Booking.com, they've all revolutionized their industries by selling trust, accountability. That's what they all have in common. They all have rating systems, and they all allow the disruption of the big brands because brands have trust. That's what a brand conveys, trust. So they disrupt those brands by allowing small vendors to have trust. Right? And that's not happened in our industry, obviously, because you've got 30 branded fund managers with 90% of the assets. And this is the industry which is supposed to be all about trust, right? The financial services, there is no tangible product. It's basically performance and trust, but nobody is selling the trust. Everybody's focusing on the performance. So Morningstar focuses completely on performance. But, you know, I understand your point in the question is probably about getting data faster. And of course, we're open to strategic relationships and perhaps doing that, but we do want to control and own our own data because there's more value in that. But after this webinar, I'm happy to discuss. I know you're a clever guy, Paul, so maybe you've got some ideas and I'm happy to listen to them. Another question is, how often is the data updated? Well, it's continuous, right? Because the managers are building their own profiles. Right? We're taking the onus away from the investor doing all the work, which is mentioned in the presentation, to make it easier for the investor to choose the small managers. Because at the moment, the easy choice, and people tend to pick the easy choice in life, is the brands. There's many people talk about the analysts at the institutional investors choosing the big brands because it's safer for their personal careers, which I agree and believe in too, but I don't think it's the only reason. I think it's also the easy choice because they don't have to do as much work, and it's extremely labor intensive. Any allocator will tell you that, to thoroughly research and under 49,980 managers, it's never ending work, right? Especially as they change and evolve constantly. So we get the managers to constantly request more investor ratings. Any investor can come onto the platform and rate a manager. That we verify them by verifying their email address if they're institutional investors, their IP address if they're a family office in Kansas, where their IP address should be in Kansas. And if not, we want an explanation why. We can verify the subscription forms as well. Did you really invest? Well, show us your subscription forms. You can redact any sensitive data, but we want to know for sure because this is a serious rating system. Third-party data from Paul. You mean like Morningstar? That's the same question, I think, right? I assume so. But yeah, that is, like I said, I'm happy to have a chat with you after the call. Another question is it sure you detect fraud instantly, even if once everything was good? So we're not trying to do complete due diligence. We're trying to verify the authenticity of a manager. Let me explain that. There are a lot of high net worth investors and family offices who allocate without doing any due diligence. And it's sad because they put their money at risk, but they do. And there are a lot of institutional investors who spend 3 years going to conferences, carrying out conference calls, spending time and money flying to meet managers. And then at the end of the process, they say, okay, let's do some due diligence on this manager. And they spend $50,000 on forensic due diligence, and then the manager fails. Well, they've just wasted 3 years of time and money. So they've got a basic level of due diligence, which is what we're doing up front. It saves them time and money because they only need to talk. They're narrowing their universe of potential managers to spend time and money on deepening their research, right? So we're saving them that wasted time and money by doing that basic due diligence up front. Let me explain a little bit more about how due diligence works because I've been doing it for 11 years. You request documents. PDS is one of the core parts of it, requesting the audit, okay? Requesting a confirmation that there's no pending legal cases against the manager. When you request the audit, the manager sends you a PDF. And the way that this is traditionally done is that you take that on a handshake. Okay, you sent me the PDF, that means you've got an audit, right? You might look at it and read it, but they could have tinkered with it, right? So what we're doing is we're getting them, the manager, to invite their BDO, KPMG, PwC auditor to log into our platform with their verified corporate email address and IP address and confirm that by uploading their version of the audit that it is indeed the version that the manager is sending out to people, because there are many managers who tinker with the audits or create their own audits. It's happened. There are many examples of this. So we're just carrying out a simple layer of verification. And to answer your question, I'm rambling on a bit, but to answer your question, yes, we do that every year for the audit, continuously. Another question here is, what pre-money valuation do you want to raise money at? Would the service be free for investors? The first question Andreas should answer, but I'll answer the second question first. The service is completely free for investors, and that's really what we're doing here. We're creating a service for investors, both high net worths who don't have the ability to do much of this due diligence or the time and energy to research all the managers, and also for the institutions for whom it is really a tough task to cover all the markets properly. That's why they hire institutional consultants. We're trying to undermine the institutional consultants by offering a superior service for free. That was mentioned in the presentation. That's really what we're trying to do. Yes, it's completely for free for investors. The only exception to that is if the investors don't provide ratings on their own investments. If they're like, I want to take the information but not give any, then we charge them a small annual fee. It's £1,100 a month at the moment, which is a small amount for an institutional investor, but it's just really to encourage them to provide ratings. And so for the question, sorry, final thing is, yeah, we really want it to be free for investors. It is free for investors because we can, once you've got the investors, you've got the market, right? So Andreas can answer the question about the pre-money valuation.
Our ingoing position is 2 million.
Yeah, perhaps I could add to that, Andreas. Christina, we will send you a convertible note. So we're doing this as a convertible note in the first instance. So it's like debt. It is, if you like, secured like a loan, and then it converts at the end of 12 months into at a 5 million level, or at a discount to a raise, the Series A raise that we'll be doing. It has optionality for the investor. But Christina, we can send that to you.
Are there any more questions? If not, we can wrap this up. And I thank everybody for your time and listening to me ramble on. And yep, I guess we can wrap this up. Thank you very much.
Thank you. Bye.
Bye-bye.
Thank you, everybody. Bye-bye.